what we do is usually we always organize talks and series, also workshops that will be related to more on technology side of it, would be more on products, data, big data, data science, and also the software engineering part where we have classes and also study groups on different sort of languages, right? So this is our Women Who Code. We encourage, we empower the women to be more engaging in the technology, but at the same time, we also welcome all the men to join us in our actions, right? Next page, please. So this track that, this series, product talk series is organized by the track called Product Talk Organizing Team. So in here we have me, myself, Brianna, part of the Women Who Code as well. And then we have Vicky on the line. Vicky, you want to say hi?
Hi, everyone.
Yeah. We have Lisa and also Alicia. Both of them will be the moderator of the days.
Yo.
Hello, hello.
And then we have we have Kim here.
Hello.
Yeah, and we have Christy. Christy is not able to join today, so we will see her in the next session, in the next series lah. So hopefully you all can join the next round. Okay, so this is the product organizing team. We will be organizing a lot more product talks later on. So if you guys have any interest on what the topics that you want to know, you can also DM us later on, and then we will also check it out and see if we can make it happen or not. Yeah. Next page, please. So going to the agenda of the day, today we will be focusing a lot on the products because it's a product talk. Then, so we will start with introducing the product and the product key challenges, which the answers will be answered by Ken and also Carmen. We will introduce them in a later on. Then after that, we will go into a more interesting part whereby we will talk about how their products is going to transform the landscape in our financial services. Next, we will go into Q&A sessions where we were taking questions from you guys, and then we will get the speakers to answer your questions. The last part, which is a more fun part, where we will ask some interesting, hopefully it's interesting for you guys too, questions for the speakers, and they will have 3 seconds to answer it and also explain to justify their reasons, why are they saying it and stuff like that, right? Then we will do a wrap up. So that's about the agenda. Next slide, please. Okay, some of the house rules, right? Because it's not a physical event, and I think most of us are quite familiar, but I still have to go through it again. So you guys, if you guys notice, you guys are all on mute right now, is to make sure we can control the scenarios, right? Then, and so if you guys want to talk, we welcome you all to talk, really. So just raise your hand, and then we have moderators to unmute you and you can talk, right? Then second one is if you're shy, but you still want to ask a lot of questions, you can post the questions to the chat group bottom at the bottom line there. Then just click the chat button and then type the questions that you want. But if you want it to be anonymous, you can just select my name and then you send the question to me. So I will just compile the question and without no one knowing that you're asking the questions. So then we will get the moderator to answer them during the Q&A. Or if you prefer to ask to our speakers yourself, you can raise your hand and then we will unmute you during the Q&A as well, right? Then the last one will be a group photo. So this is a group photo that we think, hopefully you guys can turn on the video later on and then we can take a group photo all together, okay? So this will be the house rules, some of the small ones, hopefully I didn't miss anything. And also we have already started the recording. So sendiri, no lah, if you guys want to say sensitive one, then maybe we'll filter a bit off. Next slide, please. Okay, so our panel today, we have Carmen, which is from RinggitPlus. She's the head of product over there. So later on, we will be discussing a lot of things surrounding RinggitPlus and their awesome features together. And next we have Ken, which is from StashAway. He is the country manager of StashAway. I think Ken attended a lot of workshops. I'm not sure, but me myself attended one of his talks as well, so it's quite interesting, right? And so then next we have our moderators, which will be our Lisa and also Alicia. And over to you, Lisa and Alicia. You guys, we can start the session now.
Okay, great. Great. Thank you for the introduction, Brianna.
Okay,
So,
no.
I think let's let our speakers introduce themselves and their product first, and then we'll get into the questions. Some questions will be just for one of you, and I'll direct it to either you Ken or either you Kaman, and then after that we'll do a little bit of free flow, depending on your answers, and we'll see how it goes. Yeah. So why don't ladies first? Kaman, why don't you talk to us a little bit about yourself and Ringgit Plus?
Yeah, hi everyone. I'm Carmen. So I'm currently leading the product team in RinggitPlus.com, a team of 5, mix of product managers and also product designer. I recently joined Ringgit Plus earlier this year, just before COVID lockdown actually, so that was good. Prior to joining Ringgit Plus, I was with McKinsey and Company. And also Seek Asia. For those who know, Seek Asia was previously known as JobStreet and JobsDB, also in product management world side of things. So Ringgit Plus, I think everyone would know, Ringgit Plus as a leading financial comparison website. So we've been helping over, 1 million customers, 1 million Malaysians since 2012 in their product applications, right? What I mean by that would be applying to the banks in terms of getting a credit card, in terms of getting a personal loan. We also have a insurance line where customers can actually apply for their car and motor insurance, right? So that's in a nutshell. I think this year, in terms of the product, we focused a lot on the financial literacy and the financial health aspect of consumers. I'll talk more later, during the session where we launch a product called My Ringgit Health, which is actually allows customers to check their credit score and credit health in a simple way for them to actually monitor, right, their financial health. So that's just a nutshell of what Ringgit Plus is.
Great. Thank you. Over to you, Ken.
Okay, thanks Lisa for moderating today, and for Women Who Code for inviting me. I think I do quite a few webinars, and I think just the way this has started is probably going to get webinar of the year for me. Like most of them are fun, but this one I feel like is more fun. So I'm really looking forward to today, and I want to keep it as unscripted as possible. My name is Ken. I'm the country manager of StashAway. Started off from scratch in Malaysia 2.5 years ago. We are a Singapore HQ company, but we expanded to Malaysia, and I was there since the start. We started at a Starbucks office, and then now we have a legit office, and we're growing very quickly, which is why I posted the recruitment button down below. The recruitment link. StashAway, for those of you who don't know, I'm like, how can you not know? We spend so much on digital marketing, it's like a unicorn. Like if people don't know about StashAway, it's like, oh wow, you don't open Google one, you don't care about money one, we bid on all those terms. Go on Facebook, spend so much money. Like, come on, you should have heard about us by now. So for those of you who don't know, or those of you who haven't tried, we are a digital wealth management platform. We help grow your wealth for the long term. So if you're looking for ways to grow your money that's just sitting there, or money that's for your future, retirement, whatever, we are a good option for your investments. I can go into a lot of detail about the investment product, but I think I'll leave that to later on.
Okay, great. Okay, so let's get started with StashAway. I mean, the whole concept of the robo investor and the goals-based investing is interesting. In fact, I'm one of the customers. But I think one of the things that first comes to mind when we think about StashAway, or at least when I was thinking about signing up, is how is it different from a human advisor? Am I getting more for my money because this is based on this robot, and the current context as well. I think the market's pretty volatile now, right? So how does Mr. Robo kind of maintain that sustainable return to investors?
Yeah, I think in times like this, the actual term robo-advisor, which obviously comes from the States where everything is coined, is a little bit of a disservice to us because it only tells half the story. When people hear robo-advisor, they think like we are a digital financial planner, but actually we are more akin to a digital fund manager or digital wealth manager. So I suppose, how is it really different? It differs in two main ways. The first way is how we actually recommend products to you. It's really based on your risk preferences and your long-term investment goals. And then the second thing is how we manage your money more intelligently. So in the sense that we invest your money overseas in different asset classes and try and reduce the volatility as much as possible. So it makes it very easy for you to hold on for longer. I think long-term investing is very difficult to do because basically you have to just do nothing, but that in itself is a challenge. So we lead with education as opposed to marketing or buzzwords and things like that. And ultimately users and customers have to ask themselves, what value does it bring, right? So the value it brings to you is that you can access financial services and investment services for a lot less than a typical agent or bank branch service model. The sales charges there are ridiculously high, and we get rid of a lot of those fees. So the fees, you pay 7% for a unit trust. With us, all in is only like 1%. So technology and all that really, really helps stack up all those savings. And we insert humans where it really matters, like in customer service or making important investment decisions. So that, I think, as a whole, broadly speaking, is how we are different and #better than than typical traditional industry lah.
Okay, cool. So I mean, let's stick with that concept a little bit because we talk about trust and also the human connection, which probably for the both of you is difficult to build just with the digital platforms alone, right? Without that human touch. I mean, like take for example, you have people reaching out to me, like your deputy CMD, reached out to me for a chat about my portfolio. So I mean, tell me a little bit about how you blend human interaction with your robo advising, and why, and how does that affect the product?
Yeah. So when people interface with the product, typically they download the app or they go on the web app and then sign up, right? So you don't see a human, you don't sign any forms, you don't thumbprint anything, which obviously is there to make it as easy as possible. But for certain instances, the human touch and that kind of guidance is really necessary, or is a really additive experience. So for example, I would say it's necessary when it comes to customer service. We don't have chatbots because we feel like our customers' needs are actually very pertinent to their money. So it's important that they get fast and accurate kind of information, and we support them as much as possible. That's where it's necessary. Where I think it's additive is where, for example, Lisa, you were contacted by Albert, my deputy country manager, who actually looks after premium and also high net worth clients. So be happy that you're in that space. So making the big bucks. So when you deposit a certain amount, and I won't say what that amount is, you suddenly pop up on our radar, and we're like, oh, we have to take better care of this client because they are like money bags, So we then reach out, see what we can do, and then hope that over time we can earn trust and also really, really get that referral going, right? So that's where we feel is additive.
Oh, okay. That's pretty quite interesting. We'll come back to that, customer tiering in a little bit, but let's talk a little bit about RinggitPlus, Kaman. I mean, I personally love the product design. It's very clean. Your eyes are just drawn straight to the search box, and they have the card carousel at the bottom. There's actually very minimal clutter, and so I want to talk a little bit about how this product is different to like iMoney and Compare Hero. How do you see yourself, positioned in this comparison market? Because it's similar when you go from website to website. So what is the differentiator for RinggitPlus?
Thanks, Lisa. So I think all of us at iMoney, Compare Hero, RinggitPlus, we're all known as financial comparison sites to our consumers. So you're right, like when you enter the website, it's about searching for the right products, credit cards, right, personal loans, and etc. I guess where we differentiate would be on two things. One, we have digital onboarding process and an end-to-end application with our financial partners. So what that means is actually if someone comes into our platform and they would like to apply for a specific credit card with a bank, all they need to do is engage our WhatsApp chatbot, give us probably take like 10 to 15 minutes and give us all the information that's required, including submit their personal information and some documents, right, like IC, EPF, salary slips, and etc. And it goes straight. We will take them and then go straight to the bank, right? So we help to actually do the end-to-end application process, right? That's number one. I guess the second part of it would be around end of last year, we also introduced sort of like a onboarding process where we collect all the data from our customers, right, including their NRIC and identity verification, again via WhatsApp, and it helps us to personalize our customer recommendations, right, to our customers based on their credit profile and their credit score. So that's that are the two things I think that we differentiate, right?
Okay, that's interesting that you also use a chatbot. So I think maybe this is a different perspective also. It's a feature that StashAway hasn't chosen because they want to maintain the human connection, but it's a feature that you've chosen because you believe that it facilitates the onboarding process. So, I mean, just talk a little bit about that. I mean, pre and post chatbot. Do you think that it's just explain kind of the rationale behind it, because chatbot is like so hot and everybody wants a chatbot, but sometimes it doesn't work, for certain products. So maybe just kind of what was the motivation?
Yeah, so our chatbot has been aiming to maximize sort of conversion. So it's really easy when it comes to filling up, information, right? That you usually fill up in an application form with a bank. So it's like just asking you questions and you can just select and then we map it back to the forms, right? So that was like straight away really easy and straightforward. So that is the benefit part of it, of using chatbot. But having said that, we do have incorporate a bit of a human interaction in there too, like everything that goes behind our recommendations, or even trying to make sure our chatbot copies and the way that we communicate with our customers are easily understandable. All this actually have a lot of human touch, right? So wherever we can, we try to do our NLPs, our natural language processing, and etc. Right? So that is there. Now, one of the challenges though is that I would say at the very beginning, not so much now, but at the very beginning, I think a lot of people are thinking, hey, is it safe or is it good to actually just give my information through this? But along the way, as we've tested, we became more transparent in terms of how we use that data, how we help our customers. So we've actually pretty much overcome some of them.
Okay, that's good to know. So I mean, going also, since you talked about safety and trust and people like trusting you with their money, so I mean, essentially it is I think one of the things that occurs maybe to some of your new customers, and I'm sure this is not new, is that, is my money safe with you? Because you actually take deposits, right, from your customers, and they're trusting you like the way that we would trust a bank. Otherwise, we keep everything under our mattresses, right, or just put it in time deposit. So what additionally have you done with the product to persuade people that this is a safe place and we are a safe pair of hands, for your money?
Good question, and it's something that we address all the time, and it's something I think that will obviously get better over time with digital adoption in the wider market, and people tend to trust digital services as a whole. I feel like our core customer already has a very high level of trust. There's a lot of e-wallets out there. We share a lot of information, financial information online already, so I think that helps. But obviously, those lingering concerns still are out there. But I think what a lot of people don't know, and this is a matter of education, and also because financial system can be quite boring, is that actually we are built on the traditional system of using trustees as an intermediary, so that whenever you deposit your money, it doesn't go to like StashAway, Sendirian Berhad's bank account. It actually goes into a trustee's account, which is opened up with a bank, Citibank, and then ultimately that money is invested and withdrawn. So a company like us cannot use that money other than to invest and to withdraw. And this trustee is also regulated by the SC, so they are completely independent. And all this process is obviously very boring, but it's fundamental in understanding where your money is. And if you know a little bit of this, like consumer information, you'll be a lot more trusting towards any kind of financial products and what it means to be regulated by the SC. So when you are regulated by the SE, they demand that certain things are done in the traditional way, and then we obviously innovate on top of that. So then you have safety, which is broken down into two main areas, right? Yeah, you have data and you have money. And in this situation, one of the rare situations where money is more important than the data, I would argue. And as you know, money is very physical money, as opposed to say crypto or digital assets, is very, very difficult to steal because it's sitting in a bank, it's being transferred digitally between brokers and banks and trustees, right? So very little chance of that being kind of like stolen. Data obviously is very important as well. It does keep us up at night knowing that there are threats out there, and banks and credit card companies and brokers get hacked all the time. So what we've done is essentially stepped up our security program as we grow bigger and bigger. So one of the things we've done, I'm sure you all have heard about pen testing as well, but the one new thing we've done this year is actually to employ kind of like third-party bug bounty debugging kind of hunters so that they can find weaknesses in our system, and then we pay them for that. And also, I think how you communicate with your user base is very interesting, because you can treat them like adults, you can educate them, and you can tell them all the measures that you've put into place, be very transparent. And if anything happens, you release incident reports and things like that. And then I think that goes towards placating their fears. So, sometimes when bad things happen, some bad advice that was given to us was just like, why don't you do what the banks do? Just say like, there was a technical error, and to us, that's just not good enough. And we go into a great deal of detail about how we are always improving things. So I think it'll get better over time, but obviously we're not just sitting around. There are a lot of very concrete things that we're doing.
That's really interesting. I never really knew that's what went on in the background. Probably because I don't read the newsletters that you send to me, and I should start. So okay, come on. So your RinggitPlus, you can buy a lot of different products, right? But it's essentially a platform for people to help find the best product that suits their needs, right? So when money exchanges hands and people buy things through the platform, right? What are the mechanics behind making sure that's secure and safe, and people get the best deal and so on?
Yeah. If let's say if we're talking about insurance products, right? So let's say if someone is looking for a motor insurance product or a car insurance where they want to renew, some of the measures we've put in place is definitely right onboarding and verification of their identity. Right, so that's very important in terms of making sure that it's the person that it's you that's really transacting with us. I guess the second one is we use secure payment partnerships, right? In our case, is with Razorpay, right? And when you make a payment with a established partners, I think it's also it gives you a lot more confidence, right, in terms of transacting with us, right? That is for insurance. For credit card and personal loan, it's more of application per se. So it's more of customers really relying and giving all their trust by providing their data to us, and then trusting us that we will handle this information properly and securely, right, and transmitting them to the banks. So in doing so, I guess we've taken a few strategies, right, to make sure our customer information is safe. The first one is always about monitoring and alerts. So we have all this monitoring in place where we are alerted once we know if there is any immediate threats, right? And we act on it immediately, right? Just if there's any suspicious attempt, right, of breach. So that's very important to know. And then I guess our security plan also constantly evolves to comply with the regulations, like what I can mention, in terms of regulations to make sure that all the new consumer privacy acts are in place, right? And we're always compliant towards that. I guess the last one would be on transparency. Very similar to what Waikan just mentioned. I think it's very important for us to always let our customers know or our consumers know how and why we're collecting such information in the first place, right? And how are we going to use it, and why are we using it for, which benefits them, right? So if we communicate very clearly and we are doing so in our digital journeys, I guess it's the way that we build trust, right, in terms of our with our relationship with our consumers.
Actually, that is something that I do wonder. I mean, are you regulated by any particular body, or is kind of like the Privacy Data Protection Act the only the thing that really that you kind of structure a lot of features around to comply?
Yeah, we are definitely regulated. We are same with all the fintechs, right? We do need to follow certain compliance rules and regulations, right? And it's also very important for us before we launch any product and services, we communicate and actually, discuss with the regulators in terms of what we can do and what we cannot do in certain boundaries. So yes, we are still within that regulation.
Yeah. Oh, okay. So we do keep coming back to this topic of trust. I mean, being a comparison platform, I mean, trust obviously means something else to you. I mean, you don't hold deposits in the same way that StashAway does, but you do make a promise to people that they will get the best deal on your platform. So I just wonder what happens when they find that, oh, actually this is not the best deal, the comparison was inaccurate. Is there like a money back guarantee? How does that work?
No, I think very again, we're talking about our e-commerce side of things, maybe the insurance side of things. I think it's very seldom that happens because like with all, with the current growing fintech, it's very easy. The information is easily available everywhere, right? Let's talk about car insurance per se. You have Bijak, you have MyEG, right? You have the RinggitPlus's car insurance. And a lot of them actually does do their own research, right, to compare all the different prices, and including to the direct insurers themselves, right? So they have been, a lot of times we make sure very clearly, hey, all these prices are upfront, very clear on the discounts, the benefits, and etc. before they actually transact with us, right? So yeah, I think educating our customers as the first step is always important.
Okay, yeah. So I guess, I mean, Ken, so when it comes to people's deposits, right, I often do wonder, and people do ask me, hey, StashAway safe or not? Like, what happens if they lose all your money? It's like, and then I think to myself, is there actually a scenario in which StashAway could lose all my money? I mean, is there such a thing?
Right. Yeah, it's a common, FAQ, and the way it works is that once we receive your money, we actually in that trust account, we send it to our broker, and that broker buys the ETFs, right? And we are a fund manager, but at no point do we actually, this is because of regulation, actually hold your money on our balance sheet. So firstly, it's not open to any like embezzlement and misappropriation, right? Like we can't use your investment funds like our shareholders funds, for example. Shareholders funds you can use for working capital. So if we do go down, obviously there is some sort of administration process where we will sell the ETFs and then bring it back to the trust account, and then because we have a ledger which is also double checked by us, kept by us, but also double checked by the trustees, then we will distribute the money back to people. So it's not like in a situation where you're in line like a creditor per se, right? So the boring technical term is there's no counterparty risk. Even if we go down, if the broker goes down, if the ETF issuer, something as big as BlackRock or State Street, actually go down, you actually don't lose your investment, because at many levels along the way, we already make sure. So for example, when I say like no counterparty risk, even when it comes to BlackRock, we buy ETFs that actually hold physical shares. We don't have ETF providers that hold just derivatives. So in a 2008 scenario where you have all these big banks going down, asteroid coming to the earth, everything coming to an end, then even then also it's like, if the issuer goes down, there's still some shares there. So we go through many layers, and the possibility of you losing your money is I think infinitesimally small, if I even use the word correctly. But yeah, it's a concern. I get it. Yeah. yeah. But by the time I talk through this whole 1 minute, people are just too bored and they are already convinced. So but it's true. Like finance is very boring. But like you just have to know. You just have to know that there are these. We do think about these things.
Yeah. It's good because we pay you to think about these things, because it's too boring for us to think about it ourselves.
Exactly.
Okay, so I think All right, let's talk about our favorite topic of the last 6 months, the pandemic. Okay, so has COVID-19, I mean, I can see on Ringgit Plus, right, that you're pushing COVID-19 products, right? So, I mean, that's obviously been a product choice for you. But for the both of you, have you made any product decisions that have been specific to the pandemic in your, the design or your offerings? Maybe Kaman, you can go first.
Yeah, yes, definitely. So when I first joined Ringgit Plus, we launched a sort of like a COVID-19 financial wellness survey to our customers, right? Really just to understand what their sentiments are facing this pandemic, right? And especially, it's not something that we we face every other year. It's something just out of the blue, right? And from there, I think we noticed that a lot of customers, actually up to 50 over % of them, echoing the Department of Statistics of Malaysia as well, are not able to survive more than 2 months, with whatever savings that they have, right? And the overall finding highlighted a lot about the need for basic financial literacy among Malaysians. So from that, and as part of our ongoing effort really to improve financial literacy in this country, we actually we launched a product just somewhere 3 months ago called My Ringgit Health, which is a brand new service, a free service that allows Malaysians to instantly access and understand their financial health anywhere, anytime, using our chatbot, right? Very, very simple. So that was one of the major, I guess, pivot, or not to say pivot, major product launch that we have this year. That's also in line with whatever that's happening around the global uncertainties, right? And the sentiments of Malaysians. Yeah.
Okay. Cool. StashAway, Ken?
For us, it was more about kind of assuring our customers in terms of informing them what's going on with the market and telling them, not to panic, and to explain the situation clearly, and why we think, people shouldn't panic, even though you may be experiencing losses, and it's a very, very scary time. We didn't specifically launch any product to kind of adapt to COVID per se, but that's because our roadmap is always very clear. We look towards only products that are very, very necessary and are category killers. So we tend not to do very, very tactical things, very like gimmicky things, like some banks. So we stick to our long-term focus, which is to build wealth, and we want to introduce products in kind of different categories that do adhere to that, right? So I'll talk a little bit about a new product that we launched, and then I'll talk a little bit about how harrowing it was during the March and April period, and give you all some ghost stories. So this year we launched this product called StashAway Simple. It's a cash management product, and basically, if you think about your investing, right, not all the segments of your wallet should be put towards moderate or high risk. Sometimes you just want somewhere to put your spare cash, your emergency funds, and have it earn a non-zero kind of modest return, right? And that's where StashAway Simple really comes in. We think it's better than FDs because you get a good rate, but you don't lock up your money. So that one we launched, and I can go into some detail about why we launched it, but that's something we did this year, and the take-up was very good. Partially also because I think there's a saving mindset when it comes to COVID. And if we rewind back to March and April, it's actually very, very harrowing, because stock markets and prices, asset prices, are all based on expectations. And when there are very, very limitless, bottomless expectations about where we will be based on this pandemic, you're literally staring at a potential free fall, right? And it happened so fast in February and March, where the US market fell 35%. Just imagine in 2-3 weeks, you lose 35% of your net worth, right? That's a very, very scary situation, right? So we had to explain to people about why we think that the portfolio is already well positioned. So don't panic, don't sell, because especially if you don't need the money straight away. And we actually saw a lot of inexperienced investors do sell, right? Because they're very worried. They always think that investments should always be positive, right? Which is definitely not the case. So this also, a lot of them sold, right? Not an alarming amount, but on the flip side, we saw a lot of experienced, savvy, older investors put in the most money that we've ever seen them put in. They write 1,500,000 checks and say, yeah, this is the best time to go buy. So while everyone was emptying the shelf for toilet paper, all these rich people were buying stock, right? That is the different mentality right there, right? And so, you know, it's an interesting year to put in a case study because so many different things happened. But for us, we weathered the storm. We launched a new product remotely, and we are still kind of focused on that long term.
Okay, that's quite that's fascinating. Okay, so now we're starting to talk a little bit about the long term. I want to hear from both of you, right, about where you see your products going in the short and medium term. I mean, let's not talk about like, you know, years from now, because nobody knows what's going to happen. But you know, in the short or medium term, how what kind of direction do you see your products going in? What kind of products do you think you invest in? Do you think you diversify and do other things besides, you know, what your core is now? You know, so Kaman.
Okay. So let's talk about next year also. that will be immediately, right? I think we will continue to strengthen definitely our core products. In this case, our digital end-to-end application with our banks, right, with our partners. But we also want to start sort of moving from a financial aggregator and a comparison website to a more data-driven financial advisor, like a platform, right, where we really want to use all the data that we have actually collected from our customers, including the new product services lines that we are introducing, like the My Ringgit Health that I was telling you about, to help our customers make, you know, informed decisions when actually doing a credit application, or, you know, it could be just managing money better, right? So that is where, you know, sort of in the long term, we want to get there. One of our earliest initiatives at the moment is, like I said, this year's credit score advisor, right? So we want to continue to double down on that next year. That will be what we want to do.
Okay. Would financial literacy and kind of education programs play into that as well? Seems to be like the kind of that common theme that you're alluding to.
Yes. So if you actually, most of our customers knows us by, you know, reading our blogs, you know, like how our loan moratorium articles, everything else, all the articles that Han and Pang have been writing. So that whole chunk of financial literacy education would still be key, because that is our vision, right, to Malaysians, and we will continue to educate our Malaysians in terms of what they know, how do they manage their finances during this pandemic, how you know, what are some of the money saving tips that they can have, and etc. So that is still a chunk, and that's where we really ultimately really just want to help our users more to make better financial decisions, right? Not just where you come in, pick something and then apply without knowing how that like a credit card application can hurt your future loan applications, for example, in the future, right? So no longer just a transaction, kind of like a platform, but hey, we are here. Here's what we know about you, or what we know about Lisa, what we know about Carmen, based on your financial situation now. Here are some of the products that are going to be helpful for you, or here are some of the ways that you can help to improve your financial health overall. So that kind of direction.
Okay. So so that also sounds like a great deal of, you know, personalization, you know, when it comes to, you know, engaging with your customers. So, I mean, Ken, you were talking about some of, you know, these older, more savvy and richer customers of it, and I can totally relate to that. During the pandemic, there were relatives and older colleagues that came to me and said, hey Lisa, you know that StashAway thing you talked about? How I want to try, because people just had nowhere to put their money, right? So do you kind of see this as customers that you had before, or it's like an untapped new customer segment for you?
I think they were they were always there, but in lesser numbers. And what we do find is that our average is around 32 to 35, which is a nice demo to be in. And because it's like doing business with your friends, right? Like I'm not necessarily like doing business with my dad or whatever. Like it's like all people my age, right? Which is nice. But also we can't just rely on one segment. Too young, no money. My age, maybe got money, but maybe not as much as the 50-year-old. But then 50-year-olds have their own issues, right? They are looking at retirement, they are looking at supporting their family, and they have just different needs, right? So, and then always the stigma around them being less tech savvy and whatnot, which is broadly speaking, you can generalize, but obviously we all know aunties who play Pokemon Go and Candy Crush lah. So they are not tech savvy. So they are segments, obviously. But then we had them in very small numbers, but we saw that over the March, April period kind of went up faster and a little bit more than the rest. Because in richer because they're already on very good fundamentals, right? Mercedes sales won't go down depending on recession or not, because rich always have money to spend. So they put their money to work, and it grew a little bit lah. I do think that with this new segment, it does come with a little bit more of hand holding, but I think overall it's kind of worth it because it's commensurate with the amount of money that they put in, right? So okay, I test with 100,000. You're like, whoa, test, okay. it's like my whole net worth, right? But then it's like they can just like throw some money. It's crazy how much wealth there is sometimes. You're in our little bubble.
Yeah, I know what you mean. Every time you hear about these things, you just feel poorer and poorer. But all wealth is all relative. So okay, we gotta go into the Q&A segment now, right, ladies? If I'm not wrong, and I saw quite a number of pop-ups in the chat, and I'm not sure whether anybody raised their hand. So maybe we can take some questions that have been put into the chat box.
Okay, so I'll just we have compiled some of the Q&As that we got from the participants, right? So if you guys have any more questions, just feel free to post into the chat box, and then we'll take it with Ken and also Carmen. So I think we'll go with some of the specific questions for Carmen first. So I think we have Rachel asking Carmen if does RinggitPlus actually subscribe to the eKYC customer onboarding, and also the other question is also I think more customers info related, right? So it's how do you make sure that the information that was sent to you for application, especially via like WhatsApp channel, is actually fully secured, and how is the information being passed over?
I'll take the first one first. eKYC, right? Do we actually subscribe? I think we probably have more of identification verification, right? We collect customers IC, but for those who come back, we actually ask them again. I wouldn't say we have a full eKYC solution just yet. Where you take a selfie and make sure that this person is actually the person that you're submitting. Those at the moment we don't have. We're actually trying to continue to build towards that. But we do in all our onboarding and application process, and we make sure that hey, at least we ask a few security questions, including matching back with your phone number, your previous information that you shared with us, and etc. to make sure that it's really you. So that's for eKYC. On the second question,
it's on transmitting information through WhatsApp, and how secure is WhatsApp as a communication channel.
Yeah, so I'm pretty sure everyone knows that WhatsApp has this their own encryption service, right? So it's on their end of things. They've been trying to make it very secure. On our side of things, of course, the usual data encryption services, no PII personal information to be communicated and to be seen by just anyone here, right? Anyone in RinggitPlus to be able to access it. So all these measures have been put in place, and it's also very important for us that we've put in place sort of operational security, because I guess the easiest breach will always be human errors, right? So only very certain people in working with the data would have access to them, but otherwise, we're very strict in terms of admin control and data security access, right? So that's at least the the bare minimum that we must put in place in terms of ensuring the data is secure.
Okay. Okay, yeah, that sounds well, that sounds like a lot of I think like probably tracking and also verification being done back end, like probably unknown to the customers as well.
Yeah.
Yeah. Okay, the next question that we have is from Yvonne. She's asking more towards a product perspective, right? She wanted to know more about how StashAway and also RinggitPlus actually prioritize the features to be built for your customers. I think maybe since beginning of time and how it has transformed during your first few years in Malaysia, and now that we have COVID and maybe some plans post COVID, how is it transformed, and how do you guys actually prioritize what features to build? Ken, you want to take the question first?
I'll take this first if you don't mind. Yeah, product roadmap is always changing. It's always shifting, and there's a lot of tech debt and all that to take care of. But you have loud and eager country managers like me saying, I want this now, I want this yesterday. And ultimately
everyone's boss say the same thing.
Exactly. So we look at things in three ways. So like there's features, and then there's channels, and then there's products, right? So when it comes to products, we want to make sure that we really we really introduce products that are category killers. We don't want to introduce any like Me Too products and just like it's better because it's StashAway. It's not the truth, because we don't want a non-differentiated product in a market in Malaysia. So we put a lot of effort and R&D into finding out the best, to crafting the best investment product out there. So you can probably look into three categories. The first one is wealth accumulation. Second one is cash management. And the second thing is like yield or income based. So obviously mutually exclusive, but within those, there are variations on a theme. So we will try and go deeper after we try and fulfill all these things. And investment products is something we take obviously very, very seriously. When it comes to features, I think we want to prioritize those that really make the customer experience better. Deposit times and investment times, I know, can be faster. And there are sacrifices we have to make, because ultimately customers are also sometimes very demanding, very ungrateful, because when they find out about you, they're like, oh, wow, this changed my life. And then the next day they're like, oh, why can't you do it better, faster, and like cheaper, and like, why can't the country manager be more good looking? Like, it's just very unfair. It's like, we just got here, man, and then straight away you want to cut our fees already. So things like that, we know where our shortcomings are. We always want to make things smoother. So we are fiddling with flows and button sizes and positions and all those kind of things, and we try and make it smoother, so that the customer can actually live a better life, not just thinking about their investments. And then when it comes to channels, obviously it's opportunities and opportunity cost, right? If I partner with this person, then I can't partner with this person, and this one might be bigger, but ultimately it's all just a bet, right? So we take into account the market opportunity, and also how difficult it is to implement with different partners. Like people, there are different quirks. Some of the models just aren't compatible or very rigid. Some commercially is very, very challenging, because ultimately I would say our business model is not geared or well suited towards partnerships, because we are just so aligned to the customer, because we already charge so low, like 0.8%. You talk to a partner, how much you want to share? Square root of zero is like not even a real number. Yeah. So it's like, if I talk to Carmen and it's like, oh yeah lah, you give me a CPL, you give me a CAC, and then I'm like, my 0.8, you take half, then like we both eat nasi lemak and lah. There's nothing here really. It's a scale game lah. So it's difficult, right? But we try and assess all these things. Then you add on to that different countries, right? And then getting RM1 is not as powerful as getting $1, right? So I always have to be very patient. So I think, product roadmaps are all well and good, and we are in a company that is very, very open, very, very candid with each other. So we get together and we talk it out, and we openly disagree. But once the product roadmap is there, right? And then we just leave it in the good hands of tech and go back to our day-to-day, let them build things.
Okay. Carmen, what about your end? How do you guys actually? Yeah.
I'm just going to talk about this year since I'm here for like this year. Same with why can't we have lots of technical debts, issues everywhere. RinggitPlus has been here for like 8 years now, right? So it stacks up. So I'm pretty sure I can and understands the pain. But overall, we review the product roadmap actually very regularly, like almost three times a month. To actually measure how it aligns to our strategic goals, right? But ultimately, we do two things. One is looking at the short and medium term, and the second one is on the long, more of how whatever we're currently doing in our backlog or we want to do in our backlog aligns to the longer term vision. So let me give you an example, right? With this COVID pandemic hitting us, there's a need for us to pivot a few things here and there, right? Because banks aren't just processing, they are probably they're being impacted. Your application forms that are coming in is just not being transferred to the banks and etc. They're just not processing, right? So we have to very immediately think about, okay, how can we transfer all this information to banks faster, or how can we help the banks to filter out the applications a lot easier and lower their processing costs faster, right? So that is one area. Then we look at the longer term vision. So before introducing the new product, like I mentioned earlier, My Ringgit Health, it's not just a reaction out of the current pandemic, right? We've always wanted to be a data-driven financial advisor. So it's just the matter of time whether we do it now or later. So we sort of, okay, let's bring it a lot earlier. Right, this product here is going to be very useful for our customers. It's all about customers, less of so much about the revenue influence to the company. But it's at the right time that it's happening, right? Then this is and we actually added and pivoted in our backlog, right? So we do a lot of all these adjustments, pivots, and they are mostly backed. A lot of them are backed by our customer interviews and surveys, right? We've actually run tons of them since the COVID-19 hits. We also do a lot of one-on-one interviews with our customers because we just need to go back to basics, right? The reason why financial fintech exists is to meet a lot of customers' pain point. Right? So we have to just go back to basics, trying to understand, hey, why do you need a digital onboarding or application process, right? What else can we do to help you to improve your understanding towards financial health, right? What are your pain points? What are your delights? So a lot of our decisions are also based on, bottoms up kind of customer research and surveys.
Okay, so it sounds like both of the products are very much like customer focus centric, right? If I hear it correctly. So it's always trying to please your customers and how do you get the customers to buy in and all of that, right? So that brings me to the next question that we actually have. Okay, so like usually the product will very much focus on having maybe like a strong onboarding and also like a very how do you say, attractive like front end to get people to sign up, make it as easy as possible, get it get your name out there. So Vicky has a question. She said that having a strong onboarding process is of course what a product would is an ideal flow for a product. But does your product actually have an easy exit strategy for your consumers? So it's like, do you want your consumers, how do you make your consumers stick with you? And in case that they really want to leave you, can I really stop my services with you, or do you make it hard for the consumers to leave you?
What's that saying? It's like don't cry because it's ended, smile because it happened, or some stupid shit like that. But of course we try as much as possible to keep them in the ecosystem as long as possible, right? Big green numbers tend to help, right? When everyone is making money, no one complains, right? But that is the market. We don't control the market. So we try and make people focused on the things that really matter, like how much they've invested with us, what's their ongoing investment balance, and their returns, and then try and educate them from time to time and not bombard them with market information and things that are going on, right? If you pay attention to every tick that happens, every movement, right, then you'll be very, very anxious. And that's not our job. We are not a broker. We don't want you to trade. We want you to invest and keep your money with us for the long term. Then when we exit as well, we do is obviously realistically no questions asked, like in the sense that there's no obligation, but we do want to make sure people are like offboarding for the right reasons. So there are some common misconceptions where people think like, oh, I'm in Singapore and I go back to let's say India, and do I have to sell my funds? Actually, they don't know. Then they think like they should sell their funds and repatriate it back. Whereas actually they can just leave it there. And when you withdraw in Singapore, you can actually just withdraw it anywhere in the world. Malaysia is a different story because we have capital controls. But if you're in an expat market like Singapore, you don't have to withdraw the moment you leave the country, right? So we do ask some of these questions, like did you know like you can actually withdraw your money and put it in StashAway Simple. We have our portfolios where you're taking some risk, and then StashAway Simple where you're taking essentially no risk. So like you can actually just put it in the safer part where there's an umbrella. You're very worried about markets, you can just keep it there, park it there for a while, still earn a non-zero return. And then like if you leave the country, actually you actually don't have to necessarily withdraw, right? So we do ask a few questions to be fair, but it's actually quite frictionless, and people get their money back in 2-3 days. So all in all, we want to make that process smooth as well. And we do ask them like kind of like what are your reasons for doing so, for withdrawing. And we get some heartbreaking stories, we get some quite funny stories. It's just like, sometimes people go through divorce, want to sell some stuff. Sometimes people just need the money because they're jobless. They're all very sad. And then like there's funny stuff like I already made some gains and I want to surprise I forgot my wife's anniversary, something like that. It's like very funny, very human things because this money relates to people. So yeah, it's interesting, but we try and make it quite easy.
So assuming if the customer really decided that I really want to stop this these services and all, what happens to the data and in the context of Malaysian data law, data and privacy
we
law?
actually have to it doesn't cost you a thing to like maintain an account. It's not like a bank account sometimes where there are like small charges, especially when the balances are low. We don't have that kind of thing, but we do actually have to keep the account data there for 7 years at least.
Oh, okay. What about your side, Carmen? Like, can you share some experience or stories as to, I mean, customers, they come and go, right? So how do you make them stay? And, how do you do the remarketing part? Or assuming, especially when you mentioned that you're trying to drive like a more data-driven digital platform. Yep.
Yeah. So I think I'll break it into 3 parts where people can actually exit or stop our services. One is in terms of communications with us, right? Or the marketing communications for them. So we make it very easy for them to opt out, and if they want, they can stop unsubscribing anytime at all. So that is clear. I think most of the fintechs out there does this. I guess the second one is in terms of their credit applications. Like let's say if someone apply for a personal loan or a bank, right? And if they want to change their mind halfway through, so it's also very easy for them to just come in and contact our customer service and say, hey, I'm uninterested anymore, or I've got better rates outside from other banks, right? So that is made pretty clear in terms of credit applications. I guess the third one would be in terms of any subscription-based kind of service. So for example, we have this credit monitoring service, but every time we think about introducing any subscription service where people can opt in, we also consider that, hey, we need to be able to let someone to opt out, right? Whether or not they are comfortable in providing us their identification and etc., they can actually skip the process and opt out. So that's in terms of the 3 things that we currently do. For data, it's very similar to YCAN. We also need to keep them at least for 7 years or around that. But if any time customer insists of, let's say, just removing completely the account, right, with us, we've done that not very often actually. Thank goodness, fortunately. But we can actually just let's say terminate the account, right, in our CRM, and that shouldn't be any issue.
Okay, I hope that answers I think who asked the question. Okay, yeah. So I think the next question we have is for Ken specifically, right? So it's a very interesting question. So this anonymous was asking if StashAway have an underlying hedge to protect customers' investment, or are those already captured as per what's shown in the asset allocations? So I think this ties back to a lot of what you mentioned earlier, right? When the investor loses money, and what is the percentage that they, StashAway has back end. It's probably according to what you have set up with your robo advisor. But maybe you could share a little bit on, how is there a hedge to actually protect the customer investments?
So, let me just preface by saying investments come with risk, and it's just knowing what the sliding scale of risk is and what those risks are, right? Market risk is different to FX risk, is slightly different to credit risk. So, all of it has its own risk reward. So you can't expect any meaningful rewards if you're not necessarily taking any risks, and there's no free lunch, right? So we're built on kind of low cost investing for the long term. So the components that we put together to form your portfolio is meant to be tied to this philosophy, right? Hedging inherently is quite expensive because you're involving more intermediaries who also need to cari makan, and they also want some sort of margin, right? So if we did get some sort of, say, FX hedge, like to make sure that there's no US dollar and Malaysian ringgit movement, then that would come at a cost, and we definitely can't charge 0.8% and sliding already. That would take some sort of arrangement with the bank, and then they would have to set up the derivative and transfer the risk elsewhere to someone who wants to take that risk. So ultimately, how we manage this, as opposed to, say, just outright hedge it, is to diversify our funds, our asset allocation as much as possible. Like the question alluded to, is already kind of built in. So for example, we don't just, even though we buy ETFs that are listed in the US, it's not your actual exposure is not just in the US, right? It is Asia, it is Europe, it is US, it is different emerging markets across different asset classes. So because they're all kind of like netting each other off, let's say where FX is concerned, if let's say US dollar goes up 1% against Malaysia, you will not necessarily go one up as well. You will be blended away somehow. And also, if it comes to different market risk or asset class risk, if S&P 500 goes up 5% in one day, it doesn't mean you also go up 5% because you also hold bonds and gold and all this stuff. So because they are mixed in together and very, very diversified, ultimately it smoothens out all the effects of all those risks, right? So it's embedded in the product, and we constantly educate people, tell people don't silang, do dollar cost average, don't try and time the market, don't try and think that one event is going to end the world or set you up for life. Just slowly build your position, and then hold on for the long term. So yeah, long story short, no hedge because it's expensive, and we have a very different philosophy because it's all about long term. And I have graphs for days, but every investment comes with risk. If you don't want to take risks, then FD is for you, StashAway Simple is for you, but then you cannot ask for 5% return you get 2% return
Yeah, I think that's what Malaysians don't get, I mean, like high risk, high return. It's everybody wants to make
no risk, high return.
Decent. Yeah. Yep. That's what everybody wants. Yeah. Okay. So if I understand correctly, that means to answer the audience question is there's actually no hedging in funds, but it's more of like diversification of the portfolio, and they eventually just net each other out kind of concept. Right. Okay. So which brings us to I think this is the probably the last question, right, that we have in view of our time. So this is from Brianna, right, asking that with the current pandemic, can you all share some tips on how we can make wiser decisions to improve our financial health? So Ken, I think this is a good platform for you to promote your product if you would like to.
We'll start with the basics. I think pandemic or no pandemic, good behavior is the thing that keeps people on course to a healthy financial future. So basically, never start investing if you don't have a safety net. If you don't have 6 to 12 months of expenses saved up, probably best to build that up gradually before really investing. We also don't really promote investing using credit. Don't use don't borrow money to invest basically. Your frame of mind will be very, very different. So on top of that, like I said before, it's all about diversification. The product that you invest in should always already be quite diversified, or it adds on to your diversification. And the way you can also get rid of timing risk is also by not going in a big way in one time. You can always just spread out your bets along the way, and not have that feeling of, yeah, should have bought more, or I went in the wrong time, right? So it's slowly kind of building your position. Once you have those good habits, right, you can kind of program it in yourself, where you then have this pre-programmed response every time something happens. Okay, so sometimes a market goes up 5% and you're like, yeah, I should put more. Then your pre-programmed response should be to not do anything, because market is already moved up. Even though you feel like, will it go higher? Will I go in at the top and it falls? Don't know, right? And then if you see market go down, instead of going, I should really like start thinking about selling, and because I'm very depressed, why don't you just think, okay, I'm just going to throw another $500 into the market, because in the dip, that's really where you actually can get in at a bargain. So with all these pre-programmed responses, slowly you will get rid of you'll master your emotions of greed and fear, and ultimately pay attention to other more important things in life, like your career, your family, and all that. So yeah, just those kind of broad ideas.
Okay, what about Carmen's side? Do you want to share some tips, how we can all be richer?
I think the first step would be really for you to be aware of all your financial assets and liabilities. So I guess it's really important for you to now take time, if you haven't, list out all the financial assets and liabilities that you have, and to understand where you stand, right? Then there are several things, I think more tactical stuff you can start to do, which is have a look at your monthly commitment to your sort of income ratio, to understand whether, hey, are you in a safe zone or not, right? Whether we call this a debt to service ratio, whether you are in a ratio of below 60%, you don't want to use too much of your income, just to pay for your debt, right? That's one. I guess the second one would be tactical ones also. Take a look at all of the current borrowings you have and see how you can actually reduce either the interest rate or the monthly commitments, right? And the overall cost of borrowing that you're actually paying, right? Regardless whether it's a personal loan that you have or a credit card balances that you have. So that's the second one. And then I think the third one would be in terms of protection. So before we go to being wealthy, right, and investing and like in platforms like StashAway, there's always this part of let's make sure we protect ourselves wherever we can, either through insurance, medical insurance, or etc., or our family members, right, especially in this pandemic kind of things. Before we actually think about, okay, what do we do next, right, with the money? So yeah, all in all, it's really start with awareness, try to assess all your financial assets and liabilities, try to understand where all your health is at the moment, and then reduce wherever you can in terms of the cost of borrowing, and then when you have the excess of always have a six month buffer of your income, and then we can move on to all the wealthier products, right? That's what we usually, at least from our point of view, advise our customers.
Yeah, I think the base is always to stick with the basic, knowing how much you have and don't spend unnecessarily, especially during these times, and try to maybe diversify your portfolio a little bit. Okay. I think we also have a final questions, right? Back to what Ken has mentioned earlier, from Rachel as well. She's asking if, speaking of risk, right, the StashAway has a dedicated risk management team, or like mechanism to like stop your loss limit. I think she's probably concerned about if she's actually really making losses on StashAway portfolio. So Ken, what are your thoughts on this?
Yeah, so we take risk management obviously quite seriously and it's built into our processes, right? So risk management isn't just kind of stop loss. Risk management is can start with how you build the portfolio in the first place, right? Having a portfolio of just one single stock of, say, Amazon, or a diversified portfolio like ours, the risk is very, very different. So from the get-go, already your portfolio has risk management built into it because of that diversification. And also we have an investment committee which is a interface between our our investment framework, the system, and the market. So we are not attaching a black box to the market and it just does whatever it wants, right? Like it just, we are in between, and we review the outputs of the system every month, and then we make sure that it doesn't trigger any kind of adverse signals. If it does prompt us to move the asset allocation, we call this reoptimization, then we only do so if it really is material, like it can actually avoid losses, or it can actually give you kind of like better expected returns. So there's a lot of considerations that go into the model, and there's a person that, a bunch of people in between, so that we can actually also decide when to actually enact the change of going into the new asset allocation.
Okay. Yep. I think that's all for we'll wrap up for the Q&A part. So the last part would be on the fun Q&A questions. Lisa, you want to take this over? Or, this is a really short, yeah, I'll let Lisa do it then.
I'm so worried. I don't know what to...
No problem. Okay, so you guys know the drill. You got your pen and paper. Okay,
Yes.
So basically it's a quick round of just fun questions, nothing so serious like just now, we talk about regulation, financial, like some of the answers can like answer also I don't understand. So I made the joke that I'm going to die poor, man. I'm one of those that desperately need financial literacy. So, okay, so you got your pen and paper. I'm going to ask questions. Write down your answer first, and then I'm just going to say 3, 2, 1, and you can show your answer to the screen at the same time. Okay?
I don't write so fast, but I will try.
Yeah, one question at a time. Don't worry. One question at a time. Okay. So, first one, is it harder to work with banks or technical teams?
Oh.
Yeah. Don't think so long.
Wow, this loaded question.
Someone looks like she's thinking very hard.
Okay,
like...
one. Oh, okay, there you go. Banks.
Oh.
Okay, never mind. Show already. Both said banks. Okay. So, okay, just why? I mean, half a minute. Why?
I'm not sure if you met bankers before, but a bunch of money grubbing bastards, right? So that's that. I mean, it's like, it comes down to the best fit, right? Like as a service provider, can they really take care of your problems, right? And then no one does it for free. I've met only a few bankers with the actual heart beating pulse and a heart in my life. So yeah, I don't particularly like dealing with psychopaths, but you have to lah.
I need to make a career change now.
The world's only living heart donors. Okay. What about Kaman?
Yes, on our end, it's more of they have their own regulations too that we need to sort of comply to.
So
and the
PC,
main key thing is just this is usually external factors that is harder for us to control, right? At least the tech teams that are internal, whenever we want to, we can just prioritize or influence wherever we can. So that's the main key thing. Yeah,
I can totally relate. I started my career in financial services, and then I begged to be moved into oil and gas. So, okay, second question. Okay, which do you enjoy more? Coming up with ideas or execution? Okay. 3, 2, 1, go. Execution.
Oh.
Interesting. I was not expecting that. I really wasn't. Why? Why execution?
I think it's very fulfilling lah. I mean, ideas, can be cheap, and if you live in a frictionless world as consultants, it's like all very airy-fairy lah. And there's so many micro ideas along the way of execution, right? Like the small innovations that you don't see, that you take for granted, but really help you solve problems and get out of the maze. So it's very fulfilling. I think that it's more fulfilling than coming up with a brilliant idea.
Okay, former McKinsey consultant. Macam mana?
I married a consultant as well, so I badmouth consultants. It's not personal. Strategy consultants, management consultants.
Well, having been in the consulting world, I think that what I can say makes a lot of sense, right? A lot of it is in the McKinsey kind of world, strategy, and they're trying to crystallize all the ideas and etc. But what's most rewarding to me is really just launching the product, right?
Absolutely.
Every time, and on this, if we are on time and when we receive customer feedbacks and they're all NPS is good, well, I think that is the best feeling, in my PM life that I've ever felt, right? So that I think execution to an idea will make the idea great, right? So a perfect, great execution. So for me, it's always everyone can have an idea, but it depends on how you execute it and how you follow through it, right? And it's also important that product is not just about ideas. You need to continue iterating and managing, and it doesn't end. The life cycle just doesn't end. So that's my answer.
Absolutely. Okay, third question. If you had to pick one, just one, absolutely, would you expand locally with product differentiation or go global with the same product? 3, 2, 1. Jalan. Oh, okay, we have different answers. Okay, all right. So, why?
Go ahead, Kuala.
Anyone?
Okay. I think we still have a lot of opportunities here for the underserved in Malaysia. So for me, I will just continue going deeper. To be honest, I think Genersu and RinggitPlus tried, right? In the past in Indonesia with Credit Global and etc. And they're still trying. It's a separate team. But for me, it's just there's still a lot of opportunities here. And then I'm sure all of you know by now, next year or so, there'll be digital banks coming on. So much that we can do there. Yeah.
Okay.
For us, I think it's just a situation of where we are. Obviously, no right and wrong, right? And depth as much as breadth is there's pros and cons. So with international expansion, it's something we are already embarking on, and it's fascinating to see how different part of the world is so different, but yet so same, right? Different in the sense that people are different, culturally it's different, ways of doing business different, but at the end of the day, it's all about overcoming inefficient, expensive financial services, right? So like, we always think like, oh, Singapore is better than Malaysia, but when it's also same problem, high fees, terrible bankers, all the rest, right? Same in Hong Kong, Dubai. So we are launching in, we already launched in Dubai. We are launching in Hong Kong and Thailand soon, inshallah. So we want to go worldwide, and we think that our product is world class. So I keep telling Malaysians, like, the product is good. It's like not something you can just get, right? It's like a global fund and all that kind of stuff. But they're just so tuned to new product launches. So like, well, what's new? It's like, come on, like, you got $1,000 a year, you just put $1,000 there, like, it's not so much, right? It's not like you might come up with 5 new products, you got 50 more thousand to put in, right? It's just like, just be patient.
Okay, cool. All right, fourth question now. As product owners, would you prioritize revenue growth or user growth? They're kind of related, but if you had to pick one.
Yeah.
Okay, 1, 2, go.
I got this origami problem.
Not yet, right? Revenue. Oh, different answers again. Okay.
For us, it's top line is very important because we have very low margins, so it's a volume game, right? I put some money for the company in FDs, and at that time it was 2%. I was laughing. It's like, because it's more profitable for me to put money in the bank if it's 2% than to have 0.8% in gross margin, right? And then with all the promo codes and all that people ask me for, it's like realistically not 0.8 already. So revenue is very important for us to stay alive. And even before we work and all that, we were already very focused on unit economics. So we really, really scrounge every bit of 1 bit here, 1 bit there. So we press our bankers, our vendors. I eat less now that I'm in a startup, right? No, they pay me quite well. So we take care of our people. I'll just say that. No, revenue is very important. If someone has to pay for it, right? Like if it's not shareholders, it's customers. If it's not customers, then you're being monetized in some sort of way.
Absolutely. User growth for Taman.
This is always the question that we struggle with. all product managers will struggle with. Yeah, for me, user, because I think ours is more a marketplace, right? Without the users, there's no traffic, there's no applications coming in, and there will not be any revenue. That's one. And second is all myself, at least my personal agenda is it's always about helping our customers understand really their financial situation better, right? Before I joined RinggitPlus, to be honest, my financial literacy probably is here, and then once I joined and I know so much more, I was like, oh wow, it'd be really good for people to actually know all these things, right? Make it more transparent. So user for sure, always.
Absolutely. Okay. Final question. Okay, lightning round. Final question. Which one is harder? Compliance to regulation or driving innovation in your products? 3, 2, 1. Innovation. Okay.
Oh.
Wow. Again, not an answer I was expecting, but please.
Innovation, I think, is difficult because it's like, we always ask our question like, if we do this, will we really change the game, right? There's a lot of like Me Too's out there, like I don't want to just launch a wallet. I don't want to just launch something like a card. It's quite non-differentiated and other people are better at it. So, for us, innovation is difficult because it's like, how do you really change the game and ultimately redefine the game and not just play a different game for someone else? If you play the card game, for example, right, you're barely playing the MasterCard and Visa game, right? You are in their ecosystem. They will have all the levers, and ultimately you have very small spread and can't really innovate. Also, why it's difficult is because good investment building blocks are very hard to find, right? Where the risk reward is really there and you think can actually be good for the long term. A lot of people are very faddish, so they're like, oh, is it ESG? Is it crypto? Is it Tesla? Well, right, a lot of fads, right? So it needs to be time tested as well, which is why when you actually see something, it's actually very exciting. So it doesn't come around every year.
I think mine is very, very similar to what Vican, right? I think the baseline to play in this industry is actually very high. So consumers are really getting smarter. Every time you launch something, the other teams or outside will think of that and do better, right? So driving innovation is really, really hard, right? For me, in terms of that. As for regulations, I think it's just, as long as you follow by the books, then I think that's straightforward. So, yes.
Good. That was really insightful, guys. Thank you. We should treat all of your questions next time as lightning rounds. I think getting quick and dirty answers for you guys is, really quite insightful. So, okay, we are kind of at the end of our Q&A. Thank you so much for the both of you for, your candor and your time and all everything that you've explained to us about your products today. I feel like I have so much more of a greater appreciation actually for fintech. And okay, so now we're gonna go over to Kim, who will take us through the tail end of our talk today.
Hello, everybody. Just give me a minute to share my screen. Didn't want to just surprise you there just now. Okay,
Kim
so all of you
is bringing up the screen now. Make a selfless plug. We are hiring and we are.
There we go.
Hey, this is serious,
straight
okay? Talent
Of
is
course.
so scarce, and like I'm sure you all want to work for a super fun company like StashAway. But specific to women who code, we have a UI UX website designer role open. Surprisingly, very hard to find good ones, especially. And then the second thing is we have a BI business intelligence executive role open as well. So just head over to our careers page, and we also have roles in product, right? So we have an amazing, great, fun product team, and I think you'll really enjoy working with them as well. Just saying, Glassdoor 4.9, the plugging and the bragging ends here.
Well, thank you, Vican. All right, so I trust all of you can see my screen now. So co-host, if you could confirm that.
Yep, can see.
Yep, okay, you all can see.
All right, excellent. Okay, so thank you everyone for your time today. Really good to have all of you here, and we hope that you enjoyed the talk. So normally in an in-person event, this is when we'll be going around exchanging business cards and scanning QR codes on LinkedIn. But in lieu of that, how to stay updated with Women Who Code KL and how to get involved, you can follow us on Facebook at facebook.com/Women Who Code KL. We are also available on Slack as per this slide. We will be sending out the slides after the talk, so that's all good. And if you want to keep abreast of our future events, we are available on PTIX, Facebook, and also meetup.com. You can also engage and connect with our speakers today. So Carmen and RinggitPlus, here are the links to, well, their LinkedIns, but you can also just search for their names based on their profiles that you receive in your event page, and it should be all right. Of course, this is our turn to plug, where we have other events coming up with Women Who Code KL. We don't just run product talks, but we also have study groups for various things that are available to developers, Women Who Code, and also for women in design as well, for both UX and UI. We also have some DevOps study groups and even some workshops sometimes. So one of the last workshops that we ran was the one for Tableau and data visualization. So again, thank you so much. This was really, really interesting. It was really fun for us to connect with the rest of you, and have a wonderful weekend. Any parting words from Vicky and Bree?
Yes, I got to add on. Sorry, I forgot to add in here.
No worries.
We are organizing a data workshop, and we are looking for speakers from different data roles. So if you guys have any candidates that you think that might be suitable, can just DM us on our Facebook page. Thanks.
Brianna, you're in data lah. Aren't you?
Yeah. We need more speakers.
Okay, yes, all right, fair enough.
Thank you.
Thank you very much.
Thank you so much.
Yeah, you can all drop off now, or if you want to stay
Thank
and
you,
chat.